social media tends to make you feel like you should, or you're not progressing. When real progress is for you to say, what's the easiest thing I can do today and make money and not really work that hard for it? Now think about it. That sounds real lazy, doesn't it? That sounds like, wow, you're an underachiever. But you know what? That's exactly what every new student should think like, because you don't have the skill set to be an overachiever, but you try to be an overachiever. What do? You trade more, and you trade with more leverage than you should, and you try to do more money in profit with an undercapitalized account, and you wonder why you feel like you can't do it, and you wonder why it's stressful, because you're trying to do something that's next to impossible with those conditions. And that's why I kept blowing out in the beginning. 1992, 1993, started to see some progress. 94, I pushed it too hard, thought I figured it all out. Hurt there a little bit too. And then in 1995, it was like a swing year for me. The first half of the year, I was hurt a little bit. Then I came back strong, and then in the quarter, like the third quarter, I was introduced to a lot of the stuff that I mentioned many times with Larry Williams, his confidential trading course, VHS stuff. That's what I needed. I need someone to tell me what I should be focusing on and not focus on the money. And that lesson hit hard because that's what I was focusing on. I was focused on money, and I was fearful of the losses, and I was too hopeful and too expectant of having the big windfall victories. I thought that every trade was going to be a windfall victory, and if it didn't, then I'm a failure, and it doesn't equate to that. And you shouldn't frame your whole basis as a trader with that very limiting and strangling mindset. So why does Caleb want to aim for when he's short? Whatever level is highest, because that's the easiest objective to reach to. Because if there is a cluster of two new week opening gaps, and again, this is applicable to new day opening gaps too. How do you determine which one you're going to trade, Michael? Or what is he going to reach for? Well, obviously you're always going to look for the current new day opening gap, see where that falls in where price action is trading and where it could gravitate to. If you're using the new week opening gaps, then you're going to obviously look for where's this current new week opening gap, and is it in close proximity in the last 5 new day opening gaps or 5 new week opening gaps? And if there's an overlap of any two, it's all you need, just two of them. And if there's more than that, it just means it's going to be a larger degree of probability that it's going to shift and reprice to that level. Because whether it's been traded and filled in or not as a gap, it matters not. But if the gaps are open and they're unfilled, like we have here, these two are wonderful. It's going to create like this black hole effect. Uh, it's not event horizon, which is a PD array, but it has the effect of a event horizon, but on steroids, because it's going to want to go back down into these areas and revisit them because they're natural value areas. There's an absence of buying and selling at all in these areas, hence their gap. So because we have an absence of that economic news driver impact, no medium or high impact news drivers at all on Monday. And it is a Monday, but it's not a non-farm payroll Friday Monday. So what do? We trade the pre-market session and we use the draw on liquidity based on what I'm showing you here. So Caleb would never reach for an objective beyond this one here. Okay, you understand that hopefully by now, because it's the if you're above the price action or above the draw on liquidity, in this case this one down, these two new week opening gaps, as I indicated in my tweet this morning, my direction, my bias, Caleb's bias would be to expect price to draw down today into this area here, the high, the midpoint, and the low of this current new week opening gap. And the new week opening gap is where we settled last Friday and where we opened on Sunday at 6 p.m. That's what these levels are. They're here. Okay. And the purple ones just go back one more week prior. So because these gaps are very often used to be repriced to, It matters not what school of thought you have. If you use all the other different retail ideas, if you start implementing this as a means of looking for as a bias or a session bias, okay, you're going to have a higher degree of probability stacked in your favor because this is what the market does. Okay, I mean it's a real plain, simple, generic trait to this. This is what generally will happen every single day, every single week. These are the things that happen. This is why I know I'm going to find a setup. This is how I know I'm going to be able to find setups in perpetuity. And the same thing, you'll feel that same confidence too when you understand that these things tend to repeat a lot. And you don't need to go into half of the gap, the lower half of the gap, the upper quadrant, the lower quadrant, and you don't have to go into the other previous week's new week opening gap to find profit. Now, think about the logic with that versus what you're trying to do probably right now, or what you've been doing probably for months, or failed at keeping a funded account, or never getting a funded account in your prop firm trading, or blowing live accounts, or going into severe drawdown. Because many times you're probably reaching for things that are so beyond the scope of your present skill set. And it doesn't matter how many years you've been trying to trade, you still have a very small capability because you haven't found consistency yet.